Today, we delve into a topic that has once again captured global attention and sent ripples through financial markets: the reinstatement of tariffs by President Trump following a recent appeals court decision. This development has prompted a wave of uncertainty across Wall Street and beyond as businesses and governments scramble to navigate the evolving trade landscape. In our discussion, we'll explore why this story is more than just a headline. It is a complex event with far reaching implications for trade, economic policy, and international relations. At the heart of this matter is the reinstatement of tariffs, a decision that has reignited concerns about the stability and predictability of global trade. Tariffs, in essence, act as a tax on imports, increasing the cost of foreign goods and, by extension, impacting pricing decisions across supply chains. When tariffs are imposed, paused, and then rapidly reinstated, as in this case, it creates a whirlwind of uncertainty for businesses that rely on well-structured trade agreements to plan their operations. The immediate reaction from the markets has been one of caution, if not outright anxiety. Investors are understandably wary of the potential for another sell-off, as they try to gauge the duration of these tariffs and the likelihood of further legal challenges. This volatility underscores a broader issue: the unpredictability that stems from abrupt shifts in trade policy. When companies face unstable conditions, it hampers their ability to make informed decisions regarding pricing, sourcing, and inventory, decisions that are foundational to their economic health. To understand this situation, we must consider the broader context within which it is unfolding. The imposition of tariffs by an administration is not merely an economic decision. It is often a reflection of a broader strategy that encompasses both domestic priorities and international relations. In this instance, the legal battle over the president's use of trade powers highlights an ongoing debate about the limits of executive authority. The fact that these tariffs have been reinstated so swiftly after a court ordered them blocked points to a tug-of-war between different branches of government, each vying for influence over the nation's trade policy. As these events unfold, the pressure mounts not only on the administration, but also on the judicial system. Should the tariffs remain in place, they could become a key instrument in shaping U.S. economic and foreign policy. Conversely, another reversal could exacerbate the disruptions already felt by companies and investors who are left grappling with the fallout of higher costs and postponed business plans. The legal uncertainty adds another layer to an already complex situation, complicating efforts to predict the long-term landscape of international trade. Moreover, the implications of this development extend well beyond the borders of the United States. Global trade is an intricate web of interconnected economies, and actions taken by one country can trigger a series of responses from others. Trading partners affected by the tariffs may resort to their own countermeasures, either through imposing retaliatory tariffs or by seeking to diversify their trade relationships. In a world where supply chains are increasingly global, even a short-lived escalation can prompt businesses to reassess their strategies, potentially opting to reduce their exposure to sudden policy changes by altering their production and sourcing strategies. For multinational firms, the reinstatement of tariffs is a stark reminder of the volatility inherent in the current trade environment. While some may hope for a quick resolution, others may decide that the risk of future disruptions is too significant to ignore. This could lead to shifts in global supply chains that have lasting effects, as companies seek to insulate themselves from the uncertainties of trade policy by repositioning their operations. As we draw our discussion to a close, it's important to recognize that this story is emblematic of the complexities that define today's global economy. It sits at the intersection of law, economic policy, and international finance, weaving together strands that affect not only businesses and markets, but societies at large. The ramifications of these tariffs, both immediate and long-term, will likely continue to unfold, influencing decisions made in boardrooms and government offices around the world. In the final analysis, this is a story about uncertainty and adaptability. It serves as a reminder that in a rapidly changing world, the ability to respond to shifts in policy and market dynamics is crucial. As we continue to monitor these developments, we must remain attuned to the broader themes they represent: how nations balance authority and collaboration, and how businesses navigate the ever-evolving landscape of global trade. These are the challenges of our time, and they underscore the importance of thoughtful, informed discourse as we seek to understand and respond to the complex realities of the modern world.